All right, let's get straight to it. Did your side hustle bring in more than 1,000 quid last year? If you're nodding along, you need to listen up, because you might be about to hand over way too much money to the tax man.
But don't worry, we're here to help you claim back every single penny. And look, this isn't just some wild guess. It's a classic trap that so many new business owners fall into. The good news is, getting that cash back where it belongs, in your pocket, is exactly what we're going to walk through today.
And you can be sure this advice is top-notch. It all comes directly from the expert tax advisors at Pro Tax Accountant. Seriously, these guys are one of the UK's most trusted firms for helping people just like you get their finances sorted right from the get-go, so you can relax knowing everything we cover is bang up to date for 2026.
Okay, so here's the plan. First, we'll tackle that crucial question. Is it a hobby or a real deal hustle? Then we'll get into the really good stuff, claiming your startup costs, all those everyday expenses you can deduct, and even how to find some free cash with grants. And to wrap it all up, we'll make sure you know exactly how to get your tax right.
Right then, let's kick things off. Hobby or hustle? It's a really important distinction, and we need to figure out where you stand with HMRC because, honestly, getting this wrong can cost you.
Okay, remember this number. £1,000. This is your magic number. It's the tax-free trading allowance, and it's brilliant. Basically, if your gross income from your side gig is less than $1,000 in a tax year, you're all good. You don't even have to tell HMRC about it.
So think of it like this. There are two paths. Earn under $1,000, and you're completely off HMRC's radar. It's that simple. But the second you go over that £1,000 mark, you have to register for self-assessment. And then you have a choice to make. You can either use that flat £1,000 allowance to reduce your taxable income, or you can deduct your actual business expenses. You can't do both, so you'll need to do a quick sum to see which option leaves more money in your bank account.
You might be wondering, how does HMRC decide if I'm a real business or just doing this for fun? Well, they use something called the Badges of Trade. It sounds formal, but it's really just a checklist. Are you trying to make a profit? Are you doing it regularly? Do you have a business name or website? The more yes answers you have, the more it looks like a proper trade that needs to be declared.
Okay, Section 2, claiming your startup costs. Now pay close attention here, because this is how you can save a serious amount of money, even before you've made a single penny. It's something a lot of people completely overlook. Ready for this? You can actually claim for allowable expenses going back 7 years before you even started trading. Yep, you heard that right, 7. It's an absolute game changer, and honestly, it saves new businesses a fortune, but it catches so many people out. Stay with me, this is a big one.
Let me paint a picture for you. Let's say you start trading today. But what about that website domain you bought 5 years ago? Or that van you purchased 2 years ago knowing you'd use it for the business? Guess what? They both count as pre-trading expenses. As long as they were bought for the business, you can claim for them on your first tax return.
So what kind of things are we talking about? Well, think market research, setting up your office, maybe some early marketing stuff like flyers or a website, even fees for getting some early advice from an accountant. It all adds up. The one golden rule, though, keep every receipt. Now, we need to quickly get our heads around two different types of expenses. You've got revenue expenditure. These are your everyday running costs, things like marketing or rent. You can deduct the full cost from your profits in your first year. Then you've got capital expenditure. This is the big stuff, the long-term assets like a computer or a van. You claim for these a bit differently, over time. And that's where capital allowances come in. It's just the official name for getting tax relief on those major assets. But here's the really powerful tool you need to know about, the Annual Investment Allowance, or AIA. Right now, this lets you deduct 100% of the cost of qualifying equipment up to a whopping £1 million in the very year you buy it. So yeah, that new van? The entire cost can be deducted from your profits straight away.
All right, so we've covered the startup phase. Now let's move on to the day-to-day running of your business. This is all about those everyday allowable expenses and how you can chip away at your tax bill one receipt at a time.
So what can you actually claim? We're talking about things like office costs, stationery, phone bills, travel costs like fuel or train tickets, marketing, insurance. You get the idea. The key phrase from HMRC is that the expense must be wholly and exclusively for your business. And here's a little pro tip for you. The fee you pay your accountant, yep, that's tax deductible too.
Now, for everyone working from home, this is huge. You basically have two ways to do this. First, there's the easy way.
You claim a simple flat rate each month based on how many hours you work from home. No messing about with bills. Or there's the detailed way. This means you work out the business proportion of your actual household bills. Electricity, gas, council tax. It's a bit more effort, but if you have a dedicated office space, it can often save you a lot more money.
Okay, here's a pro tip that you absolutely cannot afford to ignore. Keep your records. HMRC can request to see your receipts and invoices for up to 6 years after the tax deadline. Honestly, just setting up a simple spreadsheet or using an app right from day one will save you a world of pain down the line.
Right, moving on to something very exciting, finding grants and funding. We're talking about non-repayable cash. That's money for your business that you don't have to give back. For any startup or side hustle, this can be a complete game changer.
Let's make this real. Take a look at the Ambition to Grow grant in Northern Ireland. See how it's broken down? There's money for creating new jobs, money for business development, even money just for completing their program. This is a great example of how grants work. They're often targeted at helping you achieve specific goals.
And don't think this is just for Northern Ireland. There are regional funds all across the UK. For example, in Scotland, there's the Small Producers Pilot Fund. Your best bet is to head to the government's main website and search for Business Finance and Support. You'll find a finder tool there that can point you to grants in your specific region and industry.
Okay, we've talked about making money, we've talked about saving money, and we've even talked about getting free money. Now for the really crucial bit, keeping it all above board and getting your tax right. This is how you stay compliant and avoid any nasty surprises from HMRC.
It really boils down to 4 key steps. Step 1. Register for self-assessment as soon as you know you need to. Step 2. Keep meticulous records of everything coming in and going out. We've mentioned this before, but it's that important. Step 3. File that tax return, making sure you hit the deadline. And finally, Step 4. Pay what you owe. Don't leave it until January 31st to get started. And if you need a little nudge to get it done on time, just look at these penalties. You get an instant £100 fine for being just 1 day late. After 3 months, it starts racking up by £10 a day. And the crucial thing to remember is, this is a penalty for late filing, even if you don't have any tax to pay. It's a fine for not doing the paperwork. And as your business grows, there's another big number you need to keep your eye on, £90,000. That's the current VAT registration threshold. And this is the bit that catches people out. It's based on your turnover in any rolling 12-month period, not just the tax year. So you really have to monitor your sales month by month. The moment you cross that line, the clock starts ticking.
So there you have it, a quick journey from that initial side hustle idea to becoming a fully fledged, tax-compliant business. If there's one thing you take away from all this, let it be this. Be organized from the very beginning and be proactive about claiming every single deduction you're entitled to.
So I'll leave you with a question to think about. Now that you know the rules, what's the one expense you didn't realize you could claim that could save you real money this year? Is it those pre-trading costs? Or maybe properly calculating your home office expenses? Whatever it is, don't just think about it, do it.
And of course, a quick disclaimer. The information we've shared today is for general guidance and is accurate as of January 2026, but tax rules can and do change. This isn't a substitute for professional advice that's tailored to your unique situation.
So if you want expert, personalized advice to make sure your business is on the right track, please do get in touch with the team at Pro Tax Accountant. You can see their contact details right now. And hey, if you found this helpful, please subscribe to the Pro Tax Accountant channel for more guides just like this one. Thanks so much for joining me.